Mike Swanson of WallStreetWindow.com. And today we have to talk about what has happened with the price of gold because on Tuesday, October the 21st, it just had the biggest one-day drop in like a decade. And this has happened after a relentless run up over the past couple weeks. So is the gold rally done? And if it isn't, how do you buy? Well, I'm going to share with you the most powerful buying signal I know to time uh, the bottoms in gold. I talked about it today in the email newsletter I sent out around 7:30. And you can get this for free. Just go to WallStreetWindow.com and put in your email list, and you'll get these morning updates. And this one was critical. So here is the price of gold. You can see how it just had this huge run up. It broke through the 30, it broke out of around 3,500 right around Labor Day and went up to roughly 4,500, 4,600. And now it's pulled back down to 4,000. It's basically doubled in 2 years. If you go back to 2023, it was around $2,000 an ounce. So we've seen the price of gold double. Really in 2024 is when this bull run or leg up began. And now we're having a pullback. We last saw a pullback in April. Last year in October, there was a pullback. And in July, last year, there was another pullback too. After those previous pullbacks, we saw gold consolidate for several months and then have no leg up. That's what happened, as you can see, from April to Labor Day. So that's the most likely scenario right now. We're just going to see a digestion of the gains, but some new price support level needs to be formed. And gold has gone up so much that it's elevated away from its 50-day moving average, which is at 3,700. So I'm not even sure if it's going to pull back down to there. I'm actually a little skeptical that it will fall that much. 3,900 to 4,000, I think, is the support level to watch. But we'll see. I'm not really buying based on a prediction of a certain price level. I'm going to show you in a few minutes a better buying indicator than somebody's prediction. Look, everyone's got predictions, and what good are they, right? Now, silver could pull back to the 50-day moving average. Silver is more volatile than gold is, and it's at the 50-day moving average is like $44. So that wouldn't shock me if that were to happen. Doesn't have to happen. It can pull back half as much as that, but it's likely to happen. But with gold, you know, a drop to 4,000 is roughly a 10% move off the high. 3,900 would be a little bit more than that, even 3,800. Now, what I want to point out to you is what mining stocks did. Of course, they've had a tremendous rally too. And they also, the GDX Gold Stock ETF, made a new high the other week before this pullback began. However, you may not be able to tell from this chart, but the action in the mining stocks actually began to lag the action in gold and silver in October. Now, gold stocks are going up faster than the metal into October. And when I say lag, what happened was the metals were going up faster than the mining stocks. And that was a warning sign that this might be making some sort of peak here in momentum. And that's definitely what happened, because historically, when you have a gold and silver run up, like we've seen, and the mining stocks are jumping, if they start to lag and the metals keep going, they're basically warning, look, this move, the momentum is likely to reverse or fade out. And that's exactly what happened. Now, I'm going to show you this so it's more obvious to you. Here is a relative strength ratio. I took GDX divided by the price of gold, and it creates a ratio that shows when this goes up, GDX is going up more than gold. When this goes down, GDX, the mining stocks, are lagging gold. And as you can see, in October, during the final run up in gold and silver that we just experienced, this ratio was dropping. As silver was going up, this ratio was declining. Again, that's the warning sign, and you can plot it out right here. And I'm going to be watching this very, very closely now over the next couple of days, until because what I'm looking for is for this to give us an actual indication that the correction is over. While it warned by going down, it can also tell us that the correction is near or at an end by starting to turn up. Because what tends to happen during the corrections is the gold stocks fall harder than gold on a percentage basis at first, and then they stop doing that or even go up as gold falls a little bit more. And that gives the best buy signal that I know of to time the bottom of a gold and silver correction. So watch that ratio, look for an update on the ratio, and that could happen. Like if gold stocks, the GX is down 0.5% or something, and gold is down 1%, this ratio would go up. Or if gold stocks are up and gold, is up barely or down $10, then this ratio is giving a buy signal. So I'm watching this ratio. I'll talk about it in my emails and update there. And look, if you aren't on my free email list, you need to get on it to get these updates. Go to WallStreetWindow.com, type in your email address, and I'll see you right there. It's all completely free, and I'll be talking with you later.